Great, welcome guys to the pre-market overview. Today is Thursday, September 17th, so happy Thursday. Hope the markets are treating you well so far this week. So what we're going to do today is we're going to go through our newsletter. So this is what we do every day on the pre-market overview, Monday to Friday, because we send our newsletter out Monday to Friday. And on that newsletter, what we go through are the four major markets in the world, or four of the major markets in the world. We talk about the direction that they're going in, the probabilities for how long we can expect them to keep going in that direction, where price might turn, volatility, and news as well. It's a two-page document, so a lot is covered on that document, hence why we do the pre-market overview for 15-20 minutes to just expound on those concepts a little bit more, explain a bit more to you guys what's going on behind the scenes and how we came to those conclusions. So if you want to subscribe to get the newsletter for yourself and get that document sent to you every day, if you email us newsletter@tradewithufos.com, we will be happy to put you on that subscription list. Now, another couple of emails to remind you of. My email address is over here, becky@tradewithufos.com. There's also the support team, support@tradewithufos.com. You can email either one if you have any questions about what we covered today. So just a reminder for those joining us from within the Tradewith channel, today is Thursday, so you have stocks at 9 a.m. and then investing at 1 p.m. Eastern. So that will be what we have on today. Now, normally Mondays, Wednesdays, and Fridays, those are our futures and options days, and then sharpening sessions over the weekend, where we're going to go through concepts, methodologies, questions and answers, and psychology as well. Very important sessions over the weekend. Now, in terms of upcoming live courses, for those that might want to learn concepts from the ground up, that's whether you're from inside the Tradewith channel or from outside the Tradewith channel. If you're just watching this on YouTube or something and you want to understand more about backtesting, futures, psychology, stocks, trading plans, these are the classes we have. The next upcoming one that we have is backtesting. That's this weekend, September 19th and 20th. I will be taking that class this weekend, and it starts at 2 p.m. every day. After that, it's futures, then stocks, psychology, and trading plans. If you want to learn more about these classes, you can go to the website, have a little look about what we do and see if it makes sense for you. So I just need to put the disclaimer up. I won't read it because it takes ages, but it is obviously very important information. So you guys can come back and pause the video later if you would like to read it, or you might be able to obviously read it now if you want to mute me. Or of course, you can go to the website, which is www.youcantrade.com, and you can get additional disclosure information there. Now, in a nutshell, effectively what it's saying is that there is a risk involved in trading. You need to be aware of that, and you need to trade only and only if you are comfortable with that risk. We are here to help in terms of educational content, ideas and demonstrations, but it's not trading advice or tax advice or anything like that. Okay, so that's the disclaimer. One more reminder, which is that we have an app on the App Store, not yet on Android yet, but that will be coming. But for now, for those of you that have Apple products, if you would like to follow us mobily, you can do that and download the You Can Trade app on the App Store. Okay, so what we're going to do now is have a look at the newsletter. So the newsletter is what we have here on the right-hand side. That's the document that goes out every day, Monday to Friday. Now, we go through four major markets in the world. We have the S&P, oil, gold, and the euro. So lots of volume moves through these markets. If you trade them directly, then hopefully this is helpful. But even if you don't, due to the amount of volume that goes through them, the markets that you trade, even if they're not these markets, will probably be correlated to them or be impacted by them in some way. Now, you'll notice as well, we go through a daily chart for each of these markets. Of course, different things happen on different time frames. So if you use much bigger time frames or much smaller time frames, things will be different. But the daily chart is very commonly used, if not the most commonly used time frame. So again, hopefully for most of you, this fits somewhere in with your analysis. Now, for each of these markets, we're going to look at a few things. So first of all, climate. Climate means what direction is the market in? Effectively, what's the trend? Are we in an uptrend? Are we in a downtrend? However, more important than trend, the reason we call this our climate, is what are the probabilities associated with that trend? So let's say, for example, if we have an uptrend, do we have probabilities that that uptrend will work out for us, or do we have less probabilities? What we also want to understand is propagating. Propagating means if we are going in an upwards trend, for example, how long can we expect to keep going up for? If we're going in a downwards trend, how long can we expect to keep going down for? So basically, the way this has worked out is that on the right-hand side here, these figures show us what normally happens in that market. So how long that market usually goes up for or usually goes down for, depending on which situation we're in. On the left-hand side, this shows us where we're at now, how many candles we've been going in that direction for now. So what that tells us, or what that gives us an idea of, is how much probability we have of a continuous move to that direction, up or down, or whether or not we have surpassed that and therefore are likely to change direction. Now, that's not to say that things don't fall outside of these probabilities or that it always hits that exact number. Of course not. It's based up on thousands of points of data that give us statistical averages here. So it's just about probabilities. Again, if we've gone past the probabilities, we're more likely to see that price will change direction. If we're within the probabilities, then we have more likelihood of the markets continuing to move in that direction. So we use our ᴾᴿᴱMARKET app to give us these figures. The ᴾᴿᴱMARKET app is shown here at the bottom. Ignore the lines for now. I'm just going to look at the colors and the thickness of the dots that we see. So with the dots, the ᴾᴿᴱMARKET app will show us one of three things. We have a thick blue dot. That's one example it can show us. That's what we have here. That tells us we have a confirmed upwards climate, which means probability to the upside. Upwards trend, upwards market environment, probabilities to the upside. It could show us a thick red dot. That's the second option. That tells us that we have a confirmed downwards climate, downwards trend, downwards market environment, probabilities to the downside. What we could also see, the third option, could be a thin dot of either color. So the color is still going to tell us the direction, but the fact that it's a thin dot, that's the ᴾᴿᴱMARKET app's way of telling us there are less probabilities here. You have less statistical advantage, which means on days like that, we tend to choose to do nothing. We don't want to do anything. We don't want to act on anything if we don't have probabilities on our side. So the ᴾᴿᴱMARKET app is analyzing market data for us to tell us what's probable and what's not. And then we use that information to help us with our decision making. So that's climate. We're going to look at climate and propagating per market. What we also want to understand is nearest UFOs. Now, UFO stands for unfilled order. And what that means is where we expect there to be buy orders in the market that are waiting to push it upwards, or sell orders in a market that are waiting to push it downwards. We use our ᴾᴿᴱ app to highlight for us on the chart visually where these orders are likely to be. If it's a green UFO, a green band with a green flying saucer in it, UFO, then that is buy orders. If it's a red band with a red UFO in it, red flying saucer, then those are sell orders. Again, this is using technology to analyze market data for us and show us on a chart objectively and visually where these orders are likely to be, so that we can then again make it easier to make decisions on what we're going to do about that. So again, we're going to go through each of these climate propagating nearest UFOs per market. We're also going to come down and we're going to understand volatility per market as well. So volatility just means how far we expect price to move within certain periods of time, or you could say how fast price is going to move. So we look at the current implied volatility column here, and you'll notice each of these numbers are a percentage. What these numbers refer to is the expected movement up or down in 1 year on these markets as a percentage of their current value. So again, it gives us the annualized expectation, what we expect up or down in 1 year. Now, if we reverse engineer that, we can understand what that means in terms of expected move up or down in 1 day, up or down in a week, or up or down in a month. So again, we use volatility figures to give us an idea of how far price is likely to move within given periods of time, either up or down. The climate and the propagating give us an idea of in which direction that's likely to happen. And the propagating along with the nearest UFOs also give us an idea of where price might change direction once it's hit a big stack of buy orders or sell. So we're going to go through each of these numbers per market before we come down to look at news. So start with the S&P. This is what we have here on the left-hand side. I'm just going to make it a bit bigger here, might make it a bit easier to see. Things are a bit scrunched at the moment on the S&P. Here we go. So as we saw, we have a thick blue dot here on the ᴾᴿᴱMARKET app that tells us confirmed upwards climate probabilities to the upside. In terms of orders, we're very close between two stacks of them. We have closest stack of buy orders is here, 3352.70 to 3310.47. Now, of course, we also have this very close by and very newly formed sell UFO, this red UFO, at 3401.20 to 3428.92. And as we can see, Current price is 33.85 something. So we are in between these two UFOs. Sell orders very close on top of us, buy orders very close below us. So in terms of orders, you know, it could go either way. However, we have a confirmed upwards climate with probabilities of a continuation to the upside. So what this tells us here is that the S&P would normally go up for 10 candles. It would normally go up for 10 candles on a daily chart, so 10 days. By the way, I know that says 9.42. I'm just rounding it up. Whatever the numbers are on the right-hand side, I'm just going to round it up. Essentially, add 1. So we are on now candle number 1 out of a usual movement of 10 to the upside, meaning we do have probabilities for the price to continue to go up for maybe another 9 days or so. Now, again, that's not to say that will happen exactly that way. It might fall short a little bit. It might hit the stack of sell orders, and that might change things. But we do have probabilities at the moment of a continuous move to the upside and a confirmed climate to the upside as well. So again, probabilities on climate and probabilities of continuation of that climate. Again, sell orders and buy orders very close by, so that might change things a little bit. But overall, probabilities to the upside there, it looks like, for the S&P. When it comes to volatility, we expect in 1 year the S&P to move up or down 27.70%. That means up or down in 1 day of 0.59 points, up or down in 1 week of 1.30 points, and up or down in 1 month of 2.71 points. So that's the S&P. Let's move on to the next market, which is oil at CL. That's the continuous futures contract there for oil. So I'm just going to move price a little bit here, maybe scrunch it a bit more. There we are. Okay, so in this example at the bottom here, oil is showing us a thin blue dot. Now, what that means is that we have an unconfirmed upwards climate. So it's blue, so that tells us that we have an upwards climate, but it's a thin dot. So it's unconfirmed, meaning less probabilities, less statistical advantage. We will normally choose to do nothing on days like that because we lack statistical advantage here. Now, normally, oil would go up for 7 candles, and we're on candle number 1. So we do have probabilities of a continuous move to the upside, but we lack probabilities when it comes to the climate itself. So again, kind of 2 different things they're playing off against each other. Now, what we need to understand about the orders as well is that we've just hit a stack of sell orders. So the stack of sell orders here are 41.37 to 41.87. Closest stack of buy orders just here, 37.80 to 36.67. So we've just hit a stack of sell orders. We have an unconfirmed upwards climate. We have probabilities of it keep going up, and we have buy orders just below us. So again, we've just got different things saying conflicting, or giving us conflicting information there. So again, on days like this, with markets like this, we will choose to just keep away. We have no statistical advantage one side or the other. And again, they're conflicting against each other. So we will just let this play out, let it be interesting to watch, but not something that we're going to risk our money in. Okay, so when it comes to volatility on oil, we expect a movement up or down in 1 year of 41.13%, which means up or down in 1 day of 1.04 points, up or down in 1 month of 2.29 points, and sorry, in 1 week that was. So up or down in 1 week of 2.29 points, and in 1 month up or down of 4.76 points. So that's oil. Let's move on to the next market, which is gold at GC. That's the continuous futures contract again for gold. Okay, so gold is showing us here a thick blue dot, confirmed upwards climate, probability to the upside. Normally, gold would go up for 6 candles, and we're on candle number 3. So we do have probability for a continuous move to the upside, at least for another couple of days, at least. Again, not to say that definitely will happen. It's just statistically more likely to happen. When it comes to orders, we're kind of in the middle at the moment between these stacks of orders. So that's where current price is now roughly. We have 1836.7 to 1825.9. That's the closest stack of buy orders on this chart. And then we have the closest stack of sell orders is 2039.7 to 2060.8. So again, we're kind of in between the orders, nothing in terms of UFOs really that we're close to that could push price one way or the other, but an overall probability to the upside there when it comes to the climate on gold. Now, when it comes to volatility on gold, we expect movement up or down in 1 year of 20.08 points. Sorry, 20.08%, which means in 1 day, 24.6 points, either up or down. In a week, up or down of either either up or down of 54.2 points. In 1 month, a movement up or down of 112.9 points. Stumbling over my numbers a little bit there, but you get the point. So we're going to look at the last market, which is the euro versus the US dollar. That is the spot forex currency pair for this market. So let's just squidge that down so we see our sell orders. There we are. So on the euro versus the US dollar, we now have a thick red dot, a confirmed downwards climate, probabilities to the downside. Now, normally the euro would go down for 4 candles, and we're on candle number 1. So probabilities there of a continuous move to the downside. Closest stack of buy orders is this one just here, 1.1597 to 1.1507. I've just rounded that where it needs to be to the closest pip. Closest stack of sell orders, 1.2344 to 1.2414. Once again, just rounded that where it needs to be. Now, as we can see, we're slightly closer to the stack of buy orders, but not that close in terms of usual movement in a day. So when it comes to the euro, we do have higher probabilities for a move to the downside. Now, when it comes to volatility, we expect movement up or down in 1 year on the euro of 7.43%, which means in a day, up or down of 55 pips. In a week, up or down of 121 pips, and in a month, up or down of 253 pips. Okay, so that's volatility. And again, that tells us how far we expect these prices to move within these given periods of time. We use our climate and our propagating to help us figure out in which direction that movement is likely to be and for how long, and the nearest UFOs, as well as the propagating information there to tell us where price might stop going in a particular direction and change to a different one. So again, we're using technology, probabilities, and statistics, analyzing market data for us to give us the probabilities and therefore help us with our decision making, make it a little bit more objective, a little bit less subjective. So that's everything when it comes to direct forces in the market. Now, what I mean by that is that the most direct forces we have in a market to push it up or down are either buy orders or sell orders. Buying and selling, that's what moves price. That's all we have. Now, of course, there can be many reasons as to why there are buy orders and sell orders. That could be based on commonly used indicators, something that happens in the news. It could be fundamentals. There are many reasons that go into why these buy orders and sell orders are there. So we do need to understand indirect forces as well that do impact the market, and ideally put them together with our direct forces, which are just pure buy and sell orders, which is what we see here with our UFOs. So when it comes to indirect forces, I'm just going to make this newsletter a bit bigger, and we're going to come down and look at the indirect forces in terms of news that we have this week. So we go to fxstreet.com/economic-calendar, and we filter by high impact news and by US markets. So of course, if you want to look at things outside of that, you can go to the website and change the filters and see what you want to see that suits your trade plan a bit better. Now, we had nothing at the start of this week. It was only Wednesday that we had the major information coming out so far this week. And obviously we have tomorrow as well. Today being Thursday, September 17th, nothing today that in terms of what's scheduled to come out that could have high impact on the markets. Of course, we saw a lot coming out yesterday that had an impact. Now, when the news does come out, this is where we have these columns filled in. So if it's a number that can be reported as a figure, then it will show in the actual column. Otherwise, we can click on the report or the speech and read the report or the speech to see the impact that had. So again, for today, nothing for today, only tomorrow, and for the last bit of high impact news on US markets. Okay, so that's everything in terms of content today for the newsletter. For you guys that might want to join us and be part of the Tradictive channel, where you can join us in futures, options, stocks, investing, sharpening sessions with your Q&A, methodology, psychology as well, then you can join us at tradictive.com/youcantrade. Now, I get that there are loads of places to learn how to trade. It can be a little bit confusing. So you do have a free 14-day access. So a couple of weeks for free that you have access to us, so you can check us out first. And then if we don't suit you, if it's not a good fit, you can just cancel the subscription. If it is a good fit, then you've had a good couple of weeks to really know that before you move forwards. When it comes to classes, the next class we have is the backtesting class this weekend. If you go to www.tradictive.com/backtesting live, you can learn a bit more about that, what we do, why we do it, how the course is structured. And again, thanks to You Can Trade at the moment, you can register for any course and get an additional one for free. So we do many courses: futures, stocks, trading plans, backtesting, and psychology. So if you go to the website, you can have a look at those, see which ones suit you best, and see how you can put it together in such a way where you make the most out of that offer. If you have questions on anything I've covered today, any of the technology that we use, trading questions in general, you can email us, support@tradictive.com. We're all happy to help. Otherwise, I will be back tomorrow morning for the last overview of the week. We will see you in the sessions today if you're joining us from within Tradictive. So it'll be stocks and investing today. So we'll see you in those. And my colleague Wayne will be coming back at the end of the day, 4:15 p.m. Eastern, to be looking at what did happen today, what went as expected, what didn't go as expected, what can we learn, how can we move forwards with our trading. And like I said, otherwise I will be back tomorrow morning. So I hope the markets treat you well today, guys. Have a good one, and I will see you tomorrow. Take care.